Hello, you are welcome once again to OA Accountancy Staff. We are still on the final accounts of a sole proprietorship, but we are done with the format of the statement of profit or loss account and the adjustments of the final accounts. So in today's video, we will practice what we discussed in those videos by solving one detailed practice question. But before then, if you haven't subscribed to this channel, I will entreat you to kindly subscribe and also share for the benefit of others. So the question reads, the trial balance was extracted from the books of Ababu Enterprise, a sole trader for the year ended 31st December 2023. Land and building, fixtures and fittings, investment income, sales, purchases, returns, one amount on the debit side and other one on the credit side, rent receivables, electricity, stock as at 1st January 2023, debtors, creditors, provision for doubtful debt, advertisement, carriage on purchases, carriage outwards, discounts, one amount on the debit side and other one on the credit side, drawings, cash in hand, cash at bank, 10% investment, capital, salaries. And in the additional information, we have A. Stock in trade at 31st December 2023 was $20,000. Bad debt, $1,000. C. Provision for doubtful debt is to remain at 5% of debtors. D. Salaries owing, $200. E. Goods worth $2,000 were withdrawn for personal use by the proprietor. F. Included in the electricity is $200 paid in advance. G. Depreciation of land and building, fixtures and fittings to be provided at the rate of 5% and 10% respectively. So these are our question and our requirements. But if you remember, whilst discussing the format of the statement of profit or loss account, we said that there are some vital items you need whilst preparing the statement of profit or loss account. And these items are 1. The sales. You need your sales figure. Then you subtract your cost of sales from the sales figure to get gross profit or loss. Then after that, you look for your total indirect expenses. And you take it out from the gross profit or loss to get your net profit or loss. These are the most vital items you need in preparing your statement of profit or loss accounts. So this means that when your question has all these items, this is how your statement of profit or loss account will look like. But in our case, our question does not have all these items, so we need to work for them. So we begin by indicating the name of the organization the transactions were extracted from. So we can say either in the books of Ababu Enterprise or Ababu Enterprise. You can just write Ababu Enterprise. Or in the books of Ababu Enterprise. Then you neatly underline it. Then after that, you state what you are preparing. So we will write a statement of profit or loss account for the year ended 31st December 2023, and you will underline this as well. So after this, then we move on to create our 3 columns with the currency we are working in. So per our question, all the transactions are in dollars. So you create our 3 columns with the US dollars. So after creating the 3 columns with the currency, then we can now begin. So per the summarized format, we begin the preparation of the statement of profit or loss account with the sales. And per our trial balance, the sales is the item number 4 and its amount is 200,000. So we will write our sales figure, sales, and its amount is $200,000. So after writing the sales, then you check through the trial balance again to see if there is any adjustment to this sales figure. So we look through our trial balance again to see if there is any sales returns or returns inwards. Per this trial balance, we have 2 amounts on the same line as returns, one amount on the debit side and other one on the credit side. But as we know, the sales returns has debit balance whilst the purchases returns or the returns outwards has credit balance. So this means that the $8,000 that's on the debit side represents the sales returns or the returns inwards. So we will bring the sales returns here because we do have sales returns in our question. So we will write our sales returns and its amount is $8,000. $8,000. So we will take out the sales returns figure from the sales figure and we will get $192,000. So this amount is what is referred to as the net sales. You can either choose to adjust the sales figure on the middle column and send the net sales to the last column, or you can do it this way. Whichever way you choose to will not change the final amount. Okay, so now we are done with the sales column, and then per the summarized format, we need to move on to the cost of sales. So you write less cost of sales, and then we will start working for our cost of sales. But as we said in the previous video, cost of sales is ascertained after getting your cost of goods available for sales. Then you subtract your closing stock from the cost of goods available for sales to get your cost of goods sold. So after getting your cost of goods sold, then you look through the question to see if there is any direct cost incurred. So if there is any direct cost incurred, then you add that direct cost to the cost of goods sold to get your cost of sales. But if there is no direct cost incurred, then the cost of goods sold is the same as the cost of sales. So now let's begin working for the cost of goods available for sales. Cost of goods available for sales is ascertained by first adding the opening stock to the cost of the additional goods you acquired. And per this our question, we have two stocks, one on the trial balance and one in the additional information. The one on the trial balance is as at the first day of the accounting period, while the one in the additional information is the stock as at the closing day of the accounting period. So this means that the one on the trial balance is the one that represents the opening stock, while the one in the additional information represents the closing stock. And per this our trial balance, our opening stock is $40,000. So you first write our opening stock. Opening stock of $40,000, and it will be written on the middle column. So after writing our opening stock, then we need to look for the cost of the additional goods we acquired. So to get your cost of the additional goods you acquired, you need to look for the purchases figure. And per this our trial balance, the purchases figure is the item number 5 and its amount is $120,000. So we will bring our purchases. This purchases figure, when there is no adjustment to it, will be added to the opening stock to get the cost of goods available for sales. But when there is adjustment to the purchases figure, then that purchases figure will first be adjusted before the net figure of that purchases will be added to the opening stock to get your cost of goods available for sales. So the purchases figure is $120,000. But before we write this $120,000, let's look through the trial balance to see if there is any adjustment to the purchases. Example of such adjustment to the purchases includes stock drawings, stock donation, returns outwards. And when you have carriage on purchases, you also add that carriage on purchases to the purchases figure to get your cost of the additional goods you acquired. So you need to look through the question to be sure none of these items is in the question before you can add your purchases figure direct to the opening stock to get your cost of goods available for sales. So per this our question, we have returns outwards. That's the returns on the credit side. That's the $6,000. So that $6,000, as we said, represents the returns outwards or the purchases returns. So this returns outwards is an adjustment to the purchases figure, and it will be subtracted from the purchases. So aside from the returns outwards, when we get to the additional information, the additional information E says that goods worth $2,000 were withdrawn for personal use by the proprietor. So this additional information simply means that there is stock drawings of $2,000. And as we said, the stock drawings is also an adjustment to the purchases figure. So now that we've realized that there is stock drawings and purchases returns, then we can write our purchases figure and adjust it. So per the trial balance, the purchases figure is $120,000. Because the purchases figure is subject to adjustment, it is essential that we bring the purchases figure on the first column and then we adjust the purchases figure and we will send the net purchases or the final amount to the second column. And that final amount or that net purchases will be added to the opening stock to get the cost of goods available for sales. So we said that after writing the purchases figure, then we will subtract our purchases returns. Purchases returns or the returns outwards. And per the trial balance, the purchases returns is $6,000. So we subtract the purchases returns from it. After the purchases returns, we also have stock drawings. Stock drawings of $2,000, and that one too will be subtracted from the purchases figure. The reason why we subtract the purchases returns and the stock drawings from the purchases figure is that, as we know, purchases is the name given to the goods bought with the intention for sale. So whenever part of these goods are used for any other purpose, or whenever part of these goods are returned back to our suppliers, that value of goods needs to be subtracted from our purchases, because we cannot match goods that we've returned to our suppliers against the sales revenue we generated to determine our profits. So that's why they are all subtracted from the purchases. Also, if you remember, we said that items on the trial balance should be treated once, whilst items in the additional information should be treated twice. So between these stock drawings and purchases returns, the purchases returns is on the trial balance, whilst the stock drawings is in the additional information. So after treating the purchases returns here, we are done with it and we will not use it anymore. But after treating the stock drawings here, it's left with the second treatment, because we said that items in the additional information should be treated twice. So after treating the stock drawings here, the second treatment of this stock drawings is that it will be added to drawings on the trial balance, if any, and the total drawings figure will be subtracted from capital in the statement of financial position. But if there is no drawings in the trial balance, then these drawings will be the amount that will be subtracted from capital in the balance sheet or statement of financial position. Okay, now let's find the total here. When you subtract 8,000 from 120,000, we will get $112,000. So after getting this $112,000, then we will add carriage inwards or carriage on purchases, if any. The reason why we add the carriage on purchases figure or the carriage inwards to this amount or the purchases is that in accounting, to determine the cost of an asset, you need the purchase price, the cost of transporting the goods from your supplier to the firm, the installation cost, and any direct costs incurred in getting the asset ready for its use. So if you incurred any cost in transporting the goods from your supplier to your firm, that cost must be added to the purchase price to determine the cost of that asset. So now let's add our carriage inwards or carriage on purchases. Carriage on purchases. And per the trial balance, it is $500. So we will add it and we will get $112,500. So this $112,500 is what's referred to as the net purchases. Our net purchases. So if we were given the net purchases direct in the trial balance, we wouldn't have bothered ourselves to do all these calculations. We would have added the net purchases direct to the opening stock to get the cost of goods available for sales. But because we were given the purchases instead of the net purchases, and this purchases figure is subject to adjustment, then it is essential that we work out for the net purchases ourselves. If your question has no purchases returns but stock drawings and carriage on purchases, then it means that your net purchases will be ascertained after you subtracted the stock drawings and then adding your carriage on purchases. Also, if your question has no stock drawings as well as purchases returns but has carriage on purchases, then the net purchases will be ascertained by adding the carriage on purchases to the purchases figure. So let's add the net purchases to the opening stock. So when you add $112,500 to $40,000, you get 152,500. So this is what's referred to as the cost of goods available for sale. The cost of goods available for sale. So after getting your cost of goods available for sale, then you look for your closing stock to subtract the closing stock from it to get the cost of goods sold. Can you remember that always the closing stock is in the additional information whilst the opening stock is on the trial balance? Closing stock can only be on the trial balance when the gross profit is given. The reason why the closing stock is always in the additional information but not on the trial balance is that, as we said, items on the trial balance should be treated once, whilst items in the additional information should be treated twice. So when the closing stock is on the trial balance, it implies that that closing stock can only be treated once. So when it is on the trial balance, then it means you cannot subtract that closing stock from the cost of goods available for sales here and again treat that same closing stock as current assets. When you do that, it means you've treated it twice. And the rule says that items on the trial balance should be treated once. So when you see closing stock on the trial balance, then gross profit too is on the trial balance. So when gross profit is on the trial balance, then it means that the first treatment of the closing stock has already been done. So it's only left with the second treatment, and that treatment is that the closing stock will be added, or it will be treated as current asset in the statement of financial position. So per the additional information A, our closing stock is $20,000. So we will subtract the closing stock of $20,000 from the cost of goods available for sales of 152,500 to get 132,500, and this is the cost of goods sold. So after getting our cost of goods sold, then we will look through our question to see if there is any direct cost incurred while selling the goods. Example of such direct cost includes direct wages. So if there is direct wages in the question, then that direct wages will be added to the cost of goods sold to get the cost of sales. But if there is no direct wages in the question, then this cost of goods sold will be the same as the cost of sales. So per this our question, there is no direct wages in the question. So it means this cost of goods sold is the same as the cost of sales needed. And we said the cost of sales is the item that will be subtracted from the sales figure to get our gross profit or loss. So this means that we will push this cost of sales figure to the last column, 132,500. So it is either cost of goods sold or cost of sales. And this cost of sales or cost of goods sold will be subtracted from the net sales to get our gross profit or loss. So if the net sales or the sales figure is more than the cost of sales or the cost of goods sold here, then it means there is gross profit. But if the cost of sales is greater than the net sales here, then it means there is gross loss. So when you subtract $132,500 from $192,000, you will get $59,500. So this was referred to as the gross profit. So after getting the gross profit, then we will look for other incomes and revenues in the question, and that other incomes will be added to the gross profits. So now per this question, we have investment income as the third item on the trial balance of $1,800. But on the same trial balance, there is 10% investment of $20,000. So this means that we made an investment of $20,000, and the agreement is that we are supposed to receive 10% of that $20,000 per annum as our investment income. But in this case, we received $1,800. So that 10% of the $20,000 is our revenue earned. And that $1,800 on the trial balance is the revenue received. So we will compare the 10%, which is the one we are supposed to receive, to the one we actually received, to see if there is any difference. If the one we are supposed to receive is more than the one we actually received, then we say there is revenue outstanding. But if the one we are supposed to receive is more than the one we actually received, then we say there is revenue prepaid. Okay, so 10%
of $20,000 will give us $2,000. So this is the investment income we are supposed to receive. So we will say revenue or investment income earned, and it is $2,000. And the one on the trial balance is the investment income received, and its amount is $1,800. But as the matching concept says, in preparing a statement of profit or loss account, it is the revenue earned that will be matched against your expenses incurred, not the revenue received. So this means that it is the $2,000 that will be added to the gross profit, not the $1,800. So when you get to the statement of financial position, that difference of $200 will be treated as current assets because we've earned the revenue but we've not received it yet. So let's start listing our other income. So we will say, but before then, let's try and create our 3 column. So we will say add other income. Investment income of $2,000. After that, we have discount received also on the trial balance, and that's the discount on the credit side, because we all know that discount received is a revenue and all revenues have credit balance. So we will write our discount received. The opposite of discount received is discount allowed, and discount allowed is an indirect expenses. So it will be treated when we get to the indirect expenses portion. So the figure for discount received is $15,000. After the discount received, we have other revenue of rent receivables. And its amount is $5,000. So after the rent receivables, the other item that's likely to be revenue is the provision for doubtful debt. And provision for doubtful debt can only be revenue when there is decrease in the provision for doubtful debt. This provision for doubtful debt we are having in our question is what we refer to as the type 3 provision for doubtful debt. The type 3 provision for doubtful debt is when we have provision for doubtful debt on the trial balance as well as the additional information. So in treating such provision, you first calculate the provision for doubtful debt in the additional information. And as we said, the provision for doubtful debt in the additional information represents the current year provision, while the one on the trial balance represents the previous year provision. So you calculate the current year provision and you compare the current year provision to the previous year provision. So after comparing the current year provision to the previous year provision, if the current year provision is more than the previous year provision, then that difference will be treated as indirect expenses. But if the current year provision is lesser than the previous year provision, then we say there is decrease in provision for doubtful debt, and that difference will be treated as other income. So per this our question, we are supposed to provide for provision for doubtful debt at the rate of 5% of debtors. So 5% of debtors. But as we said, when there is bad debt in the additional information, then it means that before you calculate the provision for doubtful debt on the debtors figure, you need to first subtract the bad debt in the additional information figure from the debtors, and you calculate the provision for doubtful debt on the remaining amount. So we will first subtract the bad debt figure of $1,000 from our debtors figure, and the remaining amount will be $49,000. So it is this $49,000 that we will calculate our provision for doubtful debt on. So 5% on $49,000, we will get $2,450. And per the trial balance, our previous year provision is $1,000. So when you compare the previous year provision, this is the one on the trial balance, and this is the one in the additional information. So when you compare the $1,000 to the one in the additional information, the difference is 1,450. So this 1,450 will be treated as indirect expenses because the additional information provision for doubtful debt or the current year provision is more than the previous year provision. But if the one on the trial balance were to be more than the one in the additional information, that difference would have been added to other income. Okay, so now let's move on. So this means this all for our other income. So we will sum up. So when you sum all these three up, you get $22,000. So this $22,000 should be added to the gross profit to get our operating profit, total income or operating income. So $22,000 to $59,500, you will get $81,500 operating profit or operating income. So after getting this, then we are done with the trading session because as we said, statement of profit or loss account comprises of the trading account and then the profit or loss account. So we are done with the trading account. So we are moving on to the profit or loss account. So we will write less indirect expenses. Okay, so we will begin listing our indirect expenses, but since we've already calculated for the provision for doubtful debt, then let's begin with it. So we will say increase in provision. Increase in provision. All indirect expenses are on the middle column if only that indirect expenses is not subject to adjustment. So this 1,450 will be written on the middle column. So after the provision for doubtful debt, let's also add our bad debt in the additional information. So we will write bad debt. Also, as we said, items in the additional information should be treated twice. So this bad debt, since it is in the additional information, its first treatment is that it will be added to indirect expenses here. But when we get to the balance sheet or the statement of financial position, this same bad debt will be subtracted from our trade debtors. So the bad debt figure is $1,000. And also, the provision for doubtful debt, since it is in the additional information, it is left with the second treatment. So its second treatment is that the current year provision, that's the one we had as 2,450, will be subtracted from our trade debtors figure when we get to the statement of financial position. So per the trial balance, our next indirect expenses is rates. And because this rate is not subject to adjustment, it will be sent straight to the middle column. Its amount is $1,000. So after the rate, we have electricity as our next indirect expenses. So we will write electricity. But for this electricity, the additional information F gives more insight about the electricity. And it says that additional information F included in the electricity is $200 paid in advance. So this means that the $2,000 on the trial balance is not the electricity expenses incurred, but it is the electricity expenses paid. So to get your electricity expenses incurred in this case, then the $200 that has been paid in advance must be subtracted from the one paid to get your electricity expenses incurred. But since the prepaid electricity is in the additional information and the rule says items in the additional information should be treated twice, then when you get to the statement of financial position, the prepaid electricity will be treated or it will be added to our current assets because we've paid for a facility which we've not used it yet. So we will first write the electricity expenses on the trial balance, and that represents the electricity expenses paid. Since this is subject to adjustment, it will be written on the first column. So the paid is $2,000 and the prepaid is $200. So when you subtract 200 from 2,000, you will get 1,800. So this $1,800 is the electricity expenses incurred. So right after the electricity, our next indirect expenses is provision for doubtful debt, but we are done treating the provision for doubtful debt. So we move on to the next one, which is advertisement. But this advertisement is not subject to adjustment, or none of the additional information gives more insight about this advertisement. So it can be added direct to the indirect expenses. Advertisement. And its amount is $4,000. After the advertisement, the next indirect expenses is carriage outwards, and its amount is $600. Carriage outwards. This carriage outwards too is not subject to adjustments, so it can be added direct to the indirect expenses on the middle column. After the carriage outwards, our next indirect expenses is discounts allowed. We have two amounts on the same line as discounts, but since you know that discount allowed is an expenses and all expenses do have debit balance, then it means the discount allowed is the one on the debit side. So the discount allowed figure is $7,000. $7,000. After the discount allowed, our next indirect expenses per the trial balance is salaries. But for these salaries, the additional information gives more insight about the salaries. The additional information D says that salary owings is $200. So this means that the $1,800 on the trial balance is not the salary expenses incurred, but that's the salary expenses paid. So to get your salary expenses incurred, we will add the salary expenses owing to the salary expenses paid to get the salary expenses incurred. So this is 1,800, and we will add the salary owing of 200 to get $2,000, and that's the salary expenses incurred. So after the salaries, our next indirect expenses is the final additional information, which is the depreciation of non-current assets. And it says that additional information G, depreciation of land and building, fixtures and fittings to be provided at the rate of 5% and 10% respectively. So this depreciation, since we've only been given the cost of those assets and then the rate will be calculated direct on the cost to get the annual depreciation. So to get the annual depreciation for land and building, which cost is $20,000, the land and building cost is $20,000. And its rate of depreciation is 5%. So 5% on $20,000 will give you $1,000. And the fixtures and fittings cost is $12,000. So we will apply the rate given, which is 10% on the cost to get 1,200. A video will be made on depreciation. So we will write depreciation, land and building. Land and building of $1,000, and then fixtures and fittings. $1,200. So we will sum up. So you sum up all the indirect expenses. When you sum up, you will get 21,050. So this 21,050 is the total indirect expenses, and per our summarized format, this total indirect expenses is the one that will be subtracted from this profit to get our net profit or loss. So if the operating profit is more than the total indirect expenses, then our answer will be net profit. But if the total indirect expenses is greater than the operating profit, then the result will be net loss. So when you subtract 21,050 from 81,500, you will get 60,450. So this 60,450 is what's referred to as the net profits. This will be the end of this video, but in our next video, we'll be looking at the second phase of the final accounts of a sole proprietorship, which is the statement of financial position. But if you haven't subscribed to this channel, I will entreat you to kindly subscribe, like, comment, and share for the benefit of others.